Good evening, everybody. I was figuring there wasn't going to be a whole heck of a lot to look at because the market's still heading in the same direction. But I've got a whole bunch of stuff to look at tonight. So I was just commenting to Jim, this is June 3rd, and it is 60, I think, I forget, 61 degrees out right now here in Pittsburgh. It didn't go up above 64. When I was a kid growing up, usually by this time of year it was so hot you couldn't wait to get out of the classrooms and get down to the swimming pool. Okay, so we're going to kind of do a reflection night. Oh, you're in Florida? All right, Don. And my brother's down there on Amelia Island. He said it's been pretty toasty. Are we close to wave 3? You know, you kind of can visually see up here and here. Still got some more downside in the stochastic. So if this is wave 1, wave 3 should bring you right up out in here. Let me make these smaller and see if there's anything that looks like a support level over here. There's a gap right here that could be the target. So anyways, this is kind of a good illustration because this is what I've done many times in the past when I'm sitting long positions, when the market's down here, and I'm asking myself, what the heck? How come you're still in long positions waiting for things to turn around? Instead of sitting in long positions waiting for things to turn around, why weren't you short up in this area? So that's what kind of got me much more acclimated or convinced that when you see a candlestick sell signal and a close below the T line, you go with what the flow is telling you. So that's where I learned to be much more proactive, I guess. When I started seeing the signals. Well. All right, let me, hold on, I've got some. Okay, whoops, all right. And then also, the NASDAQ. Where do most people sell? Oh, what was that? That darn thing. You can see how people are starting to sell off the biggies. I would go right to the biggies here, right? Things like Amazon. They're selling, and this is where everybody starts unloading. Apple, same scenario. So, yeah, there were some good bullish engulfing signals today, but nothing yet to tell us that we want to be jumping into this market just yet. Apple. We've been short Nvidia, and this is what I've learned, and I say learned. This is what has struck me the most convincingly through the years. That back before candlesticks came along, I would be sitting here saying, "Oh man, when does this turn around? Why did I buy? Or why didn't I sell when I bought it over here? Why didn't I sell here?" Now I can look at it and say, all right, told me to close out the position, started telling me to go short. Now you can sit comfortably. So instead of sitting here anguishing about when is it time to cover or close out your long position, you're sitting here thinking, all right, when do I now get ready to take profits on my short position? So the main aspect of what I've learned with candlesticks is when it told me to be out or short, instead of anguishing about when was it going to go back up, just do what the chart told you to do. Netflix, kind of the same scenario, not as clean a chart. Facebook was obviously much stronger. You can see the little slow curve. You can see the doji gap down. Told us the 50 was not going to act as support, and this level wasn't going to act as support. So if it closed below the 50, where was the next target? The 280 moving average. Now, was it feasible that it could get there in one day? No, maybe 2 weeks it would get there. But once again, knowing when to be in the right, in the correct direction, puts you in a situation where if things are going to move in that direction in a big way, you've got much higher prospects of being in the position going the right way. Tesla, same scenario. This is where I kind of use the term observe the obvious. The obvious was that you were in a downtrend. Then you had a bearish engulfing, and it didn't get back up above the T line. It told us that we're probably still in a downtrend. Well, at least now we've had the benefit of being short when it was accelerating in that downtrend. And Goog, don't trade this one at all just because the numbers are too big for me to comprehend, but you can observe the obvious here. They heading down and they couldn't get back up above the T line. So I'm pointing this out because it was just so painful for me for many, many years that I'd be sitting in something like this saying, all right, maybe it will bounce here. Maybe it will bounce here. Oh, man, get me out of this, and that's when it usually turned around. Now I'm looking at it saying, all right, stay with it, let's stay with it and see what happens. Okay, so we recommended this one today, even in a bearish market. You can see the bobble breakout. And the reason we go after a bobble breakout is because the probabilities of it working is that so much or so strong that it's usually going to produce a good profit even if the market's going the opposite direction. Marvell still holding up above the T line. However, look at the what do we want to call it? Exchange volume. What the heck is this? Wrong there. I don't know. Wrong there. But anyways, notice the conviction of the buying. Not very strong. However, notice which direction it's moving when the market was heading down. So right now, it's not telling us they're selling it off, or they're not really buying it. But with the market conditions down here, if this does bounce at some point, or the market does turn around, at least you have a few positions in the portfolio that can work well when the market does kick back up. Very closed right smack dab there on the T-line today. Still looking for this to stay above the T-line and continue to move positive. And GH, watching this one because you can see what's happening right now. Even with the market trading off, it's still holding up above the T-line. So it's on the watch list to see if it gets through this level. You might have a good strong run, but that's going to be also based upon it getting up through that resistance level. IOVA. Even though we had a big, huge bearish engulfing, closing right here, it told us what we needed to do. If it opened lower, you closed out the position. Because what's our rule about a 45 degree? You stay long until you see a sell signal and a close below the T-line. So not closing it out yesterday gave you only one strategy today. It had to open positive and trade positive. So it had a little bit more relevancy to it because look what it did at the T-line. It used the T-line as a support level. CPRT, because of the kicker signal, still moving in the right direction. And RCM, it's on watch because of that morning star or the cradle type pattern, but not moving. So we're still watching to see if it can break up through this level. Now that is, let's see, I think we got one more that we've got on our bullish watch list. ATXN, ATNX. That's also trying to break through kind of this area, giving you a J-hook pattern. So we still have some that are trading in the right direction because they're above the T-line. But the majority of the trades right now, we're sitting with quite a few short positions. Only not because we happen to be real clever and be in short positions, because we know the market's been in a downtrend, and we have gotten some good sell signals right here at the T-line. So INGN, you just stay short on this. Now we're watching, it's kind of hovering right in this area. So we got our safety stops on. We don't want to see it probably even come up through today's high at this point. Let's make this bigger. All can see me. So got a good downtrend. Now we have to see what, again, we're at least attentive on this one because we're in the oversold area and it's kind of basing in here. Either it's got to break down some more, or if we start seeing some buying, it's telling us this is the area that the support is starting to work in. The LVS. We're getting ready to cover this one. We didn't today, even though it came back up through the high of the doji of yesterday, only because the market wasn't showing anything that was telling us that they're turning things around right now. Did I do this one yet? No, shorted this one. See wave 1, wave 2, and then kind of your bearish flutter kicker signal telling you, and especially when they kind of went down through this support area, that we were in wave 3. So this is why knowing the signals or the patterns gives you that much more visual evidence that things are moving in the right direction. Wave 1, wave 2, bearish doji, harami, gap down from the doji. By your support level, or your support level, want to see it get down through this if this is going into wave 3. Now, if it gets down through this, we know we probably have more downside. If it supports here, then we can kind of anticipate that's where the support level is. Be ready to start taking profits on the short positions. Design, same scenario. Where was the target? The 50-day moving average. Now we watch to see what it does at this level. Las Vegas Sands, still in a downtrend. Notice the bearish doji sandwich. Where would our safety stop be? We want to see it come back up through today's open. Because if it does that, at least we know where it's probably heading to. A bounce back up to the T-line. XC, not a strong bearish chart, but still a bearish chart. Because of this right here. Kind of an evening star signal, and look where it failed. I mean, this is not a coinky-dink. This is the sellers right at the 50 were selling. So if we've got a blue ice failure in progress, where's our next likely target? Down here in this area. We were going to short VC because of that same criteria. Failure at the T-line, a doji type gap down. What do we got going on? Wave 1, wave 2, possibly wave 3. And when I say possibly, it's still going to be a function of, do they continue to move this market down until they find a support level, which could be in 2 days, it could be in 5 days. Right now, you only have one major strategy. You stay short until you see a reversal signal. Oh, I guess I did all the things. Labu. Nothing major. At least trying to slow down its descent, but nothing there to get excited about. That was Labu. Nugget. Bullish engulfing. Strong price move. And that's a function of gold having a strong price move. Which means if you can identify that, then you know at least you have a sector that if you want to be long, you can be long in the gold stocks, or you could have been long in the gold stocks. AU, KL is still probably a decent buy. Look at your bullish engulfing gap up scoop type pattern. And what do we expect coming out of a scoop type pattern? At least a slingshot effect. So where would I start looking to see where I might run into resistance? Ooh, I don't know. Right. That might be too much. More like that. Anyways, what is the expectation, CB? You have no idea. Now, obviously, gold is moving in a bullish direction because of all the indecisiveness or all the fear factor out there right now. Maybe it's there. But you can see you got more upside left in the stochastics. You can see how you have a fry pan bottom supporting right on a support level. Don't know. I would just say stay long until you see a sell signal. All right, things that look decent. Here is CNX. Make it. Left-right combo. Now, remember, let's see. For those of you that did the top rank signals and patterns section, look at this. Bullish Harami, didn't confirm. Piercing signal, didn't confirm. Left-right combo is strong enough that you usually get a confirmation. I wouldn't be afraid to be buying this one on the basis that it's probably coming back up to this channel, which means your 50-day moving average. AN, bullish confirmation. Observe the obvious. What was happening right here at the 200? Every time they touched it, they bounced it back up, making the next viable target at least up here, and maybe even up on this trajectory. So, but at least the fact that we can see we have a bullish signal and a close above the T line tells us we probably should be watching this one. CISN was, why is that? If that ain't a fine howdy do. We'll have to look at CISN on your own charts. Tech, bullish engulfing in the oversold area, closing above the T line. GCP, another one, for crying out loud. What's going on here? Don't know why those aren't coming up. Here's a slow curve. Look where it ran into resistance. Right here at the 50. However, if this starts trading positive tomorrow, either because the market's coming up or you see strength in this one, if it breaks through the 50, where's your next target? Oops. Right along this trajectory up toward the 200. ABIO had a major change. Now this one becomes interesting, not only because indecision, whoops, change of decision. Now you watch this one because if this starts moving, what's another relevant factor on this price move? The magnitude of the move. This comes back up to here. Pretty much you're getting pretty close to doubling your money. So there's big percentage trades on this one that you want to keep an eye on. So I might be more apt to buy this one on strength and immediately go to my 10-minute chart and see what the 10-minute chart is telling me because of the amount of movement. Here's one, HMI. Open positive. Above the previous day's open. If it opens positive tomorrow, what do you got going on? A bullish flutter kicker, a very strong reversal signal. AMGN, same scenario. Opens positive tomorrow, you've got a bullish flutter kicker making the next likely target up toward the 50-day moving average. So there are still some longs that have some viability. Viability is. Kind of a little morning star signal, closed right at the T line, makes this very simple. If it opens positive, you can start buying, and you know where your stop is. You shouldn't trade back below the T line, or it shouldn't close back below the T line. CSIQ, gap up, best friend. Some added credibility that it's bouncing right off the 50 or off the 200. Then today they took it back up. I told you this consolidation was over. Look for more upside. Kind of the same scenario. Whoops, it was better earlier. But I would look for a 45-degree coming off a plan ever since the kicker signal. Because it consolidated and started back up, I'd still be a buyer of this one, especially if it comes back up through this level. Tells me my 45-degree will be in place. let's see, did AN, Auto Nation, and then CTB is this Cooper Tire, Morningstar Signal Scoop type pattern. That's got some prospects that are coming back up to the moving averages. Target, J-hook pattern. I'd be ready to buy this one on positive trading, anticipating wave 1, wave 3, taking you up into about the $95 area. And SNBR, you can see what type of pattern that's setting up. There's your fry pan bottom. So the reason this is relevant is look what it's done over the past few days, and look what the market has done over the past few days. Got the at least the visual evidence of a fry pan bottom, which means you can pretty much stay long on this one as long as it doesn't close back below the T-line. Now, I was bringing up Coop because it sold off pretty hard, but apparently they must have announced earnings because it's trading up here. This becomes a good kicker potential if they open this above today's open and go positive from here. At least giving you the prospect of coming back up to the top of the channel. So it makes for a good option trade. So there's still some buys, but I wouldn't be going after them aggressively. This came back up. Kicker signal, but it almost looked like it was doing a bearish flutter kicker. If this opens lower tomorrow, you can start shorting it because, again, observe the obvious. You're in a downtrend, and every time it gets up to the top of this resistance level area, they're selling it back off. It could be coming back down into this area. CNC, a kicker signal to the downside. I wouldn't be afraid to be shorting this one on weakness tomorrow, because remember what our kicker signal does for us. Domo, I would suspect this one's heading for the 200-day moving average. See how hasn't been able to get back up above the T-line. Funko. This one, when they broke here, let's see, kind of a wedge formation, breaking down. Watch this. If they trade this lower, especially through this level, makes at least this your first likely target, and maybe even further to the downside. But the fact that they broke the wedge support level makes it that much more credible that the sellers are definitely in control at this point. And VRNS, this was just kind of that same scenario. Look at, you had a bearish double doji sandwich that you failed here at the 200. So that's still showing that because of this failure, and maybe the failure of this level, that you've got a strong downtrend in progress. Same scenario in LPSN. Look at your little support level right here that was breached. I think I can say this. With a bearish doji sandwich, where's your next likely target? This thing that everybody else is obviously watching, and you know the sellers are in control. Pick out something that everybody else is likely looking at to see if that's going to be the next target. OSPN, wave 1, wave 2, look at the slow curve. If this one opens lower tomorrow, definitely want to be shorting it. with the prospect to be heading down into this range. Workday, again, it broke kind of the support area. Notice your doji gap down, and then the failure. I would suspect they could be coming all the way back down to the 200-day moving average. And Twitter, same scenario. Build this gap. I'd look for the 200 to be the target. So right now, if you're shorting, you want to be very nimble, because we probably don't have too much more downside in this market. Now, I'd say we probably don't have too much more downside. We're going to be selling until you see something, whether this was it. But as soon as if they gap this market down tomorrow, now you start looking at wave 1 and wave 3 are pretty much completed. You start looking to cover your short positions and thinking about going long. Okay, that's about all I got today. Yeah, somebody was commenting about what to bring as far as where to the coming to the private training sessions at Keuka Lake as casual as you can. Now, we usually advise people to you're leaving from some place that's hot. Probably going to have hot weather up there, but you also want to bring a jacket because, yes, you want to. There will be nights where it gets pretty nippy sometimes. And if it's weather like we're having right now in Pittsburgh, where it's going down into the 40s tonight, definitely want to have some warm, but we'll know that better when we get, I'm sure, in the first week of August, the weather will warm up nicely. Okay, so do we have any general questions on candlesticks? Oops, hold on. When a stock has a strong morning, should you take profits when it starts to drop? Today's CFMS broke its recent high and then fell off in the afternoon. Is there a signal that tells us to cash out? The one thing that you always want to keep in mind is that if you don't have a reversal signal yet, if you see buying in the morning, there's just kind of a very general rule of thumb. If you're in a downtrend, they usually buy in the morning, sell in the afternoon. If you're in an uptrend, they usually sell in the morning and buy in the afternoon. Your furnace just kicked on? All right. Yes, I do have a chart for soybeans. I'll bring those up here in a second. So, what was it? CF. John, remember, you're not always going to buy at the optimal point. I mean, everybody wants to buy and have it go straight up. So if you bought today and it backed off, now you come to your next assessment. What does it need to do to keep you in this trade? Right now, it definitely needs to not close below the T-line. Preferably, you'd like to see it open positive and trade positive. So just because you bought here and it closed here didn't negate what was happening on this pattern. Just didn't get it at the right spot or it sold off some. So now you make your next assessment. It closed right there. What do we really want to see tomorrow to tell us that this J-hook pattern is still in place? A positive open. If it opens lower, then you start watching and see what it does at the T-line. Now, remember, as we mentioned this weekend in the emotions training. Probably about 1/3 of your trades are not going to work. Now, that's nothing to be concerned about. That's just reality. And I was telling the session this weekend, in futures trading, if you can hit half your trades correct, meaning 50-50, you're going to make a fortune. So I always looked at it that if I was making approximately 70% of my trades correct in stocks, I should be making good money. But there's a facet that you have to always keep in mind, which is if 70% of your trades are going to be good, you better know what to do on those 30% that aren't good, which is if you analyze that it didn't work, close it out. It's not that you analyzed anything wrong, just that with all the market conditions, about 1/3 of the trades aren't going to work, and as long as you realize that, if you see something not working, close it out. So if I bought here and I close out here, that's not going to bother me. That just told me, the market's not working well, this one didn't break out. But that doesn't tell me to get rid of this chart. It tells me, let's see if they still break out. They can always buy back in. There is probably a decent percentage of the time that I buy here, sell here, buy here again, because the reason I bought it in the first place was because it was setting up. If it didn't set up for the next couple of days, I don't know whether they're taking it back down to here or here. But if I see it comes down here and then comes back up, I can always buy back in. I would, I don't know what percentage, but I'd probably say at least 25% of the time, I'm in a trade, get back out of it, but then get back in it when it starts doing what it was supposed to in the first place. And CBOE, all you can do on this one, Joe, is, let's see. Yeah, let's hold off on the individual ones until I tell Jim to do the double line. George, a flutter kicker. Which one was it? A-E-I-O. Nope. E-N-X. Nope. Oh, boy. Why can't I remember? Kicker signal. Now, this is a kicker signal. It opened here and closed here. The next day, they gapped it down at or below the open and went the opposite direction. So they've kicked it in the opposite direction. Was it AMGN? Yes. So a flutter kicker is, look at this, they opened here and closed here. Then today they gapped it up above this open, but instead of doing a strong signal, they did a doji. Now we go back to our simple rule of a doji, which is they're going to move it in the direction how they open it. So if they open this positive tomorrow and start trading positive, you've got a flutter kicker, because if this becomes a green candle, if you took this flutter out of that, you'd have a kicker signal. There it is, HMI, same scenario. Notice they opened here, closed here, gapped up today above the open. So if they open this positive tomorrow, what do you got going on? That it's probably going to trade positive. If it creates a green candle, if you took this candle out, that little flutter, you'd have a bullish flutter kicker. Now, a bobble is a J-hook pattern that is much more clearly defined by a resistance level. So notice how you had a wave 1, came right smack dab to the 50 and failed, then pulled back. Now, notice it kind of hovered around the T line, came back up through the 50, which was the resistance level before, Well, now it's telling us the 50 is not acting as resistance anymore. So essentially, if you took the 50 out, you have a J-hook pattern. The reason we call it a bobble is because it came up here, bobbled, and then did the J-hook pattern, but it was much more defined because we could see the resistance, we could see the support, and then we could see the resistance wasn't acting as resistance anymore. So the reason we recommended it today is because a bobble pattern has an extremely high probability of performing. Oh, and I didn't answer the question. Yes, if you're planning to come to the lake, dress very casually. We're usually in shorts and our Hawaiian shirts and our sandals. You don't have to worry about sleeping quarters. We all stay at the house. You don't have to worry about the food. You're well fed. We go to the restaurants right on the lake, stretch our legs and look at the water. But the important part of it is for 2.5 solid days, we're talking about investing. It's not like once we leave the computer screen, we don't talk about investing. And it's a good place that if you don't have everything in order, but you've got the grasp of it and you want to really get it refined, this is the place where you can, we drink a lot of wine too, yes. So Finger Lakes in New York have, I think the last total I knew is 58 wineries. And they've won some, I think their Rieslings have won some world champion taste tests over the last couple of years. Michael, Abe should be sending that out. That information to be sent out. If not, I'll make sure he puts it on the next weekend is next summer. The weekend we're doing this is on the week of August 2nd. I think you fly in on a Saturday, or you drive up, depending. If you have to fly in from someplace, I pick you up at the Rochester Airport. Takes us about an hour and 15 minutes to get down to the lake. Just some people bring their laptops so they can trade while we're there. And the total is $4,900. That's what we started with years ago. We've just kept it at that level. But that includes 2 solid days of sitting in front of the computers, going through the analysis, also concentrating on if you're having problems keeping your profits or have some sort of mental bugaboo. We build that right into the presentation for the whole 2 days, 2.5 days. You don't have to worry about food. You don't have to worry about the room. What do you have to worry about? Nothing. When we take our breaks, I usually have it as 5 people. And the reason for that is, I did it years ago with one-on-one, and what happens is most people get brain fried after the first day. So there's 5 people. You can see the screens. Well, I've got 3 30-inch screens, and we sit at the table, but the table is overlooking the lake, and it's the type of thing where when we get up to take a break, it's not like we're going out in the hall of a hotel. We usually go out on the deck, stretch our legs. If it's real hot, which I'm hoping it will be, we jump in the lake for a few minutes, refresh up, dry off, and then sit in front of the screen. Now, some groups, we usually go all morning and go have lunch, come back and do all afternoon, and go have dinner. And then I've had a couple groups that come back at 7:30 and we go to 9:30 at night. But the whole point of these type of training sessions is it is a concentrated analysis of what you should be looking for, and builds into the fact that not only are you trying to identify what your best trades are, but you're also kind of clearing your mental evaluation of what you should be doing to make those trades successful. Okay, I guess with that, for the 4900, somebody was asking, any of the trainings that we have in the members area, once you come up to one of these sessions, all that is free. Everything on the training area is free. So if you get done with a session and you email Abraham and say, I'd like to have the gaps presentation so I could review those again, it's all sent out to you for free. All right. Jim, go ahead. Soybeans. Soybeans gapped up after hours. You can see what it's doing, getting back up into this range. And Jim, I guess go ahead and do the double line. Oh, you did already. Okay, do the other. In 4.2 seconds, do the second double line. You can see where it's trying to climb back up to the 200-day moving average. They just showed apparently the crop reports of how much oops, I don't know what's happening. Oh, I know. That right about now, the corn, I forget I didn't recognize the numbers on soybeans, but I know corn, right about this time of year, almost 100% of the crop should be planted, and they've only got 31% of the crop planted. And that is at a time when right now, I think 2 days ago was the last day that you could get the corn crop in. So that means if they've only got 31% of the crop planted, that's going to be the crop for the year. And so that was based upon, see what's happened to corn prices over the last 4 weeks, 3 weeks, 4 weeks. Then they gapped it up again and selling it off a little bit. But still lots of strength in the corn prices. All right, American Airlines, stay short. Now you do have an inverted hammer, doji, in the oversold area. So my safety stop would be above today's high if I was short. And CME, stay long, as long as it stays above the T line. Lyft, another one where you stay long. I don't know why that chart line's on there. You stay long, you got a little J-hook pattern, use the T line as you stop. It shouldn't come back through that level. And TRM or MRTX, they announce earnings or something. Get ready to buy this one on Positive Trading tomorrow. Beazer, another one that if you were short, you get ready to cover this one. If you didn't cover it today with it coming back up above the high of the doji of yesterday. If you're short, be ready to cover this on positive trading. TiVo, well, how about that? Yesterday it wouldn't come up. I don't know why it didn't come up on the charts yesterday. But TiVo, you get ready to buy this one still if it goes positive tomorrow. I don't know why. Yesterday when I tried to bring that up on the charts, nothing came up. Boom. Well, you can see which direction you're moving. You're sideways. If you've gone long, just watch to see if it gets up to this level and see what it does at that level. Beyond Meat, all you can do here is stay long as it stays above the T-line. Now, it looks like you're in a trend channel, so you might have hit the top of the trend channel, so expect some, at least you want to stay long as this doesn't close back below the T-line. ADM, that's a good looking chart. Get ready to buy this one. AMD, if you bought this one, here's a good example that if this gapped up after an inverted hammer and you were long, put your safety stop where it opened. It shouldn't have come back down through that level. Now it doesn't make for a very good trade. Little Morningstar signal on this one. Another one that you can get ready to buy on positive trading tomorrow. Halo. This one's okay. It's not quite a bullish engulfing signal. You can buy this one if you like it, but remember, I can't tell. Is that an actual, that might be a bullish engulfing signal. I can't tell if they opened at the same place. If you're buying this one on positive trading tomorrow, don't let it close back below the T-line. Dish, that one's having a hard time getting through the resistance level, and it's not a very, maybe I got a much bigger look at this one. Oh boy. If I bought today on positive trading, I would have closed it back out when it came back down through the T-line. And it's just not a very good looking chart for at least short-term trading. Here's AYX. You can get ready to short this one with the anticipation that your little slow curve and you're breaking out through this or down through this level would take you down to the 200-day moving average. Comcast, stay short. You're in the oversold area. Put your safety stop above today's high. SMAR. The bigger the signal, the more compelling there's selling. You can be selling this one on weakness. And ZTS, another one's not really fantastic, but you can see where it's supporting right here on the 50. So if you're buying this one on positive trading, you can maybe anticipate coming back up into the trend trajectory. Nothing great on here. You don't have you don't have a sell signal, just a down day. So if you're shorting this one on weakness tomorrow, just be ready to cover it if it comes back up through the 50. And the reason you're more concentrating on on any buying is because when you don't have a sell signal, it may just be telling you it's a down day during an uptrend. Zoom, right now I'd be ready to go short, especially if it came down through this little support level. ZS, stay short. Use today's open as your stop. If it came back up through there, it would tell us that the 50 is kind of acting as a support level, especially when you're down in the oversold area. Rent-A-Center, nothing yet, but you can be buying this one on strength. It wouldn't be the most compelling. I don't know why I'm making these charts so small. Let's look at it. Wouldn't be the most compelling, but it's moving. It's giving you the impression that it is moving in the right direction. Bang, stay short, but I'd use today's high as a stop. We did AMD, Deere. You can be buying this one. First little target is probably going to be filling the gap. Second target is filling this gap. So if you're buying this one or long this one, don't let it close back below the T line. AMD, no. If you're long, you should have gotten it back out of it today. You can see that it's not going anywhere. So you had the prospects that maybe it was bouncing and breaking out, but this tells you you're right back in this mess. I'd be someplace else. And the SOX, another one that if you closed it out today on the short side, yeah, I'd stay out of it. But if you stayed short, you definitely don't want to see it come back up through today's open. That would tell you there's too much buying down in this area. ENPH, if you stopped out over the last couple of days, you can get back in. If you've stayed long, don't let it close back below the T line. Nally, I don't know what dividend yield is paying, but that's a kicker type signal. Be ready to buy this one on positive trading, but again, your percentage move isn't probably going to be as significant as buying it for the dividend yield. Pfizer, nothing of any great consequence there. If you're long on the longer term, don't let it close back below the 50. Tandem, stay long as this stays above the T line. Riot, nothing. I don't know if you're short, you can stay short if you were able to get short up there. I wouldn't be long right now. CERN, get ready to short this one on weakness. Let's see. Oops, didn't scroll down. Planting progress. Yes. Not very much in the ground right now. Starbucks. Ah. Oh. Ah. Oh. Just nothing of any great consequence. Yes, yes, it's still too wet to plant. Oh, I had Kiva. Is that what I did? Oops. Maybe that's what I did. No wonder I couldn't find it. All right. And Micron, if you're short, you just stay short. Once again, I'd use today's high as my stop. Oh, ENEH. Not scrolling fast enough. Yeah, it's still in a 45 degree. SLNO had a big bearish engulfing signal today. If you're long and this opens lower tomorrow, I'd close it out, anticipating they're coming back, taking profits back to the T line. You could always buy it back on the next strong buy signal. And Labu still in a downtrend, trying to base, but not there yet. Okay, so one basic strategy right now is you don't want to be going long yet because we haven't seen a confirmed buy signal. And you don't want to be going short at this point because you're probably closer to the down or to the bottom than you are. So if you're just, at this point, you probably should just be sitting. If you're in short positions, you hold the short positions. If you're ready to go long, you still need to wait to see a strong buy signal. All right, everybody. We'll see everybody bright and early tomorrow morning. We'll see you then.